This is the Scrap Metal Commodities Recycling and Economic Report by BENLEE and Raleigh Goldsboro Recycling, February 19th, 2018. Last week, commodity prices were mostly higher and economic reports were mixed. U.S. steel production rose slightly, remaining slightly ahead of last year and well ahead of 2 years ago. Oil rose about $2.50 a barrel to $61.60 on good demand and a weak dollar, as strong U.S. production is keeping prices somewhat in check. U.S. oil production hit a new all-time high in the history of the United States. Absolutely great for jobs and great for reducing our risk in Middle Eastern problems. Iron ore was steady at $78, remaining near multi-month highs on good growth of demand and good supply. Scrap ferrous prices were steady, but export prices are on the rise, which could take domestic prices up next month, along with 232 actions, which we will talk about shortly. Stainless 304 scrap rose to a multi-year high on good demand and a weak U.S. dollar. Copper rose a huge 20 cents to $3.24 on good demand and again a weak U.S. dollar. Copper is down 3 cents this morning to $3.21. The 5-year chart has copper slightly off the multi-year high that it hit 2 months ago in December. Copper inventories were little changed on the higher prices, which might be expected. Aluminum rose 3 cents to 99.5 cents, remaining near the multi-year high of 2 months ago on good demand and a weak dollar. Aluminum LME inventories rose slightly but still remain near about 8-year lows of last week. But as said, many U.S. smelters are full and need little scrap. Cardboard prices fell again on weak demand from China and are near almost 2-year lows. At the current $110 a ton, prices were 68% higher last year. The Department of Commerce released their 232 report based on the effects of imports of steel and aluminum on our national security. Major tariffs and quotas are being recommended that would help U.S. producers on top of the major tariffs that were put in place 2 years ago by the Obama administration. If this happens, we will see higher steel and aluminum prices. The U.S. dollar fell to a new 3-year low with some slight recovery on Friday. The low U.S. dollar takes up commodity prices in U.S. dollars and lowers prices for U.S. companies that are exporting while raising import prices we pay. U.S. retail trade fell unexpectedly by 0.3% month over month in January, after showing no growth in December and below market expectations of a 0.2% gain. It was the largest decline in retail trade since February of last year, mainly due to a drop in auto sales. This bad news is somewhat good news in that slowing will help keep inflation down. U.S. industrial production fell unexpectedly by 0.1% month over month in January, following a downwardly revised 0.4% increase in December and missing a market expectation of a 0.2% gain. Mining output contracted while manufacturing production showed no growth. U.S. housing starts jumped 9.7% month over month to an annualized rate of 1.3 million in January, following a downwardly revised 6.9% fall in December and beating market expectations of a 3.4% rise. It's the highest rate since October 2016. This is great for jobs and will put upward pressure on prices. The University of Michigan's consumer sentiment for the U.S. increased to 99.9 in February from 95.7 in January, and well above market expectations of 95.5. It's the second highest reading since 2004 preliminary estimates showed. Both current conditions and future expectations improved. Wall Street had one of its worst weeks ever 2 weeks ago and had one of its best weeks ever last week, rising over 1,000 points to 25,219 on overall good news in the economy. As always, feel free to call or email me with any questions, and we hope all have a safe and profitable week.